Elfreda, Jonker. I'm the Client Portfolio Manager at Alphinity Investment Management. Today I have Trent with me. He's one of our global portfolio managers, and today we will be reflecting on the first quarter 2026 results season on the global side. So Trent, as a starting point, tell us what were some of the sort of broader highlights for you from the reporting season?
Yeah, thanks, Elfreda. Look, it was a very strong reporting season. The median stock EPS surprise was 6%, which was a 4-year high. S&P now expecting 22% growth in EPS for this year, which is very, very strong. I think what's interesting, the free cash flow per share was a little bit under that, running at around 13%. And that is part of the dynamics of what's been driving quite a bit of the EPS upgrades, that being that AI CapEx cycle where we are seeing a bit of a swap for the hyperscaler CapEx flowing into earnings for a lot of those companies associated with that trade.
So were there any other particular pockets of strength that were driving those results?
Yeah, Elfreda, there really were. It was basically there's two games in town. So first of all, energy, as we see energy prices lift on the back of the Iran war, you're seeing that flow through a whole lot of the energy companies' earnings profiles. And then as I spoke about, it was really AI infrastructure, which there were some extraordinary blowouts in terms of performance there. And those businesses in those areas just continue to feast on that hyperscaler CapEx, which took another leg up as we ran through this reporting season.
So given that you are the technology analyst, you've recently been on a few trips, can you share a bit more detail around this technology and particularly that AI infrastructure trade? And do you think this is still the beginning, or where are we in this trade?
Yeah, that seems to be the main question in markets at the moment. And I was in San Fran in February and early March, and it did feel like there had been a bit of an inflection in terms of the AI activity. And I think in terms of the bellwether for that indication, you have a look at what's happening at Anthropic. Yeah. And you saw some updates that came through the end of March. Their revenue was running at $30 billion, which was 3x on the start of the year and 10x on what had happened the year before. And so you're seeing that start to come through as a whole lot of companies start to move from the experimentation around AI and start to get into production. And the other piece, the other element showing that support was the hyperscaler CapEx that I talked about before. Some of the escalations in terms of the CapEx, they're not really slowing down, they're just accelerating, and that's washing its way through that entire AI infrastructure CapEx theme.
So one of the things we've recently seen is really just that broadening out of that AI ecosystem trade into CPUs and memory and everything else, but we can't talk about AI and not reflecting a bit more on the Max 7s or the Max 6. Tell us, what did you think of their results and which ones did you think were the best?
Yeah, look, if I had to rank them by strength in terms of the Mag 6 this time around, I think without a doubt the Google result was the best. And then I'd probably come down to Apple, which was very strong, and then Amazon, Microsoft, and if anything, the one that was weakest, I think, out of that cohort that reported was probably Meta. So in terms of Google, look, their cloud growth was extraordinary, running above 60%, and you're not seeing any real impact in terms of AI search, having an impact in terms of that core search business yet. So that business looks to be firing. Apple, look, they posted exceptional growth, even though they haven't got their AI strategy right yet. It still seems like regardless, people are buying phones, and the theory is that we had a massive post-COVID inflection in terms of iPhone demand, and you're starting to cycle that out now after 5 or 6 years. People just need a new phone. So they don't really care about the Siri functionality, they just need a new phone, battery life's going down, some nice new colors, off you go. Amazon saw some better growth come through AWS, so that they seem to be getting a bit of traction in their chip business as well, not just for internal purposes, but selling externally. Microsoft saw some decent growth, but maybe the growth that came through Azure wasn't, the bells and whistles and the real blowouts that we saw through GCP. And Meta, look, the result itself was okay. The revenue guide was in line, but where the market will give you a pass is if you're raising CapEx and they're seeing it come through the revenue inflection. This time they did ramp CapEx again, but the revenue just being in line wasn't quite enough to give people comfort that monetization was backing that escalation in spend. So that's how I'd rank those 6. I think definitely Google at the top end and probably Meta at the weaker end this time around.
Well, fantastic. For more information from Trent and the team, please visit us on alphinity.com.au. Thank you.
Thank you.